Thanks for joining me on today's episode of the Simply Financial podcast. I'm your host, Christopher Calandra, and I hope to increase your financial IQ with today's episode, which is something to be careful about. And let me say at the outset, this episode will be a bit more salesy and a bit more self-promotional than I tend to be on the show. I'm always aware of how I'm perceived. But let's start by talking a little bit about IRAs, traditional IRAs in particular. It's estimated that 25 million U.S. households, which is about 62% of the U.S. population, have traditional IRAs with rollover assets within the IRA. Rollover assets are assets that originated in employer plans like 401ks and like 403bs as two prime examples. So someone then leaves a company, they built up money in their 401k or 403b, they often will roll that over to an IRA. Those assets are considered rollover assets when they sit in the IRA. Now, lots of people do this. Lots of people, when they leave a company, either they get fired, the company closes, they leave, they get laid off, they retire, what have you. They decide they're going to take the money out of the 401k. And there's some really good reasons why people do this. Sometimes it is to sever that last tie with an old employer. Sometimes it's for investment flexibility. Could be to get help from a financial advisor, sort of like me. There's lots of times people also want to consolidate so they don't have too many accounts. So those are some of the key reasons why people opt to move money from their 401k to an IRA. This, by the way, can be done without any current tax implications. The taxes are deferred. So we do a lot of rollover work with clients here at Elliott Wealth Management. It's one of our key core competencies. We bring a lot of expertise to the table on this. Number one, how to do it effectively, mitigating taxes, how to review and assess so you're making a good decision, and when money is rolled over to establish a robust investment plan. It's really centered to the work that we do here at Elliott Wealth Management. So that kind of lays the foundation. So this mistake I'm speaking about, Vanguard, the powerful investment management company, excellent company, found that almost 1/3 of those that rolled money over still had money in cash 7 years later. So they took money out of the 401k, they moved it to an IRA, they rolled it over, and then they did nothing with it. The money stayed in cash for 7 years. This is about 30% of what Vanguard is seeing. This is based, by the way, on data from 2015. That's alarming. That means that those people missed out on 7 years of potential returns. There were lots of opportunities along the way to invest in fixed assets, CDs, better bank accounts, stocks, bonds, ETFs, mutual funds, all kinds of different things. They missed out on all of them. The thinking is that this is because people are not paying attention. So you don't want to be in this camp. You don't want to roll money over, leave it sit idly by, and not pay attention to it and not have that money work hard for you. Now, that could mean different things risk-wise. I'm not suggesting you have to take a lot of risk, but you probably don't want to leave it in cash for 7 years. So this is sort of disappointing. So here's the self-promotion. At Elliott Wealth Management, over that same period, we have 0% of our clients that would have neglected to allocate the money in their IRA. The purpose of working with an advisor is so that the advisor can help you make good, consistent financial decisions and to stay up to speed on what you ought to be paying attention to and to avoid pitfalls. Vanguard, great company, but they are the poster child for do-it-yourself investing, which I have no problem with. There are lots of people that can and do, and maybe even should do it yourself. But if you're going to do it yourself, you do have to do it. You do have to pay attention, and you have to be I'm going to say smart. I mean smart financially, where you put the work in, you're well read, you understand things, and you pay attention. Otherwise, you could be someone that after 7 years still has their money idle in cash in the IRA. You don't want to be part of that statistic. But that can happen at a place, Vanguard, because Vanguard's not going to call anyone, generally speaking, and say, hey, you haven't invested your money. When we're working with our clients, we have a personal, in-depth business relationship, and we've made a commitment to them to communicate with them to avoid pitfalls such as this. So that's the self-promotion. Hopefully it comes off well. So a couple of takeaways. If you've rolled over money in the past, you want to make sure, regardless of where you moved it, that that money is not just in cash, unless you want it to be, that money is allocated as part of some overall investment allocation strategy. Secondly, if you're looking to roll over money, you have retirement plans at old employers, you want to be careful to make sure you do the right things. And again, have an investment plan and not have the money just sit idly by and sort of neglected. And lastly, consider working with an advisor, because we can help you with these decision-making things to consider. Not only helping you make a decision, even to let you know what decisions need to be made and when. So there's the self-promotion. Thanks for listening today. I really appreciate it. If you haven't subscribed to the podcast, it's free. Please do so. And if you want to check out the work we do here at Elliott Wealth Management, go to the website, elliottwealth.com. Thanks for listening. I'll be back with you on the next episode of the Simply Financial Podcast very soon.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues, or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.